Hey everybody, welcome back to Drawbridge Finance. My name's Levi Woods and today I'm down at the shop and I'm doing a little recap of a video that I did last year where I proposed a really quick and dirty portfolio, 10 stocks that return 7% returns or greater. Welcome back to all my subscribers. If you guys aren't a subscriber already, please click the subscribe button down below. Turn on your notifications so you get my videos. As always, we're gonna do a little character comparison. Today, I'm gonna pit Alice versus Bob. We're gonna build a little chart and have a theoretical investment from 1 year ago and see how the two different characters would have handled their portfolios in a slightly different manner to see what their outcome would have been over the course of the year.
If they had taken $10,000 and invested equally in those 10 stocks. As always, I've got my chart set up. So we've got Alice on the top in yellow, we've got Bob on the bottom. They're both going to start with $10,000 in their account, and they are going to look at the 10 companies that I did the video on. You can see they're both identical. We're going to have a line for fees. We're going to have a total transaction, and this is going to be on a monthly basis. And then we're going to have a running cash balance so we can see how the characters are going as the year progressed. Now, last year when I did the video on February 7th, the share price of Apollo was $5.92. For that, Alice and Bob were able to purchase 167 shares. You can see Alice and Bob have done the same transaction. So Apollo, $5.92, 167, giving them a total debit of minus $988.64. So they're completely equal. Now, in my scenarios, I always like to include the commission fees. So there's 10 transactions highlighted in white, in these cells that are white, and each transaction costs $10 because they are with a low flat fee trading platform. They're taking care of their own investments and they are making the trades themselves. So 10 transactions, $10 each, $100 in fees for that initial transaction. They're completely equal. They have $9,992.71 in their account, and they have a remaining cash balance of $7.29. This is February 7th of 2017. As expected, the dividend in February pays out. This is an automatic transaction, and it becomes cash into their account. From BK, Alice receives $8.16. So does Bob. At the bottom of the month, we can see the total transactions. They had a credit of $66.07. They're both equal, $66.07. You can see where those totals are coming from. Cash balance of the previous month plus the dividend that paid out in February. As many of my viewers pointed out, Eagle Energy cut their dividend. Now, what happens when we get a dividend that's been cut, especially on these dividend stocks, the stock price goes down. So Bob and Alice had just paid 72 cents for this. Immediately following the news, within a couple of days, the stock had dropped right down. Alice was paying quite a lot of attention to her portfolio, so she decided that she was going to sell her Eagle shares. She had 1,375 shares. She had bought them for 72 cents each, and she decided to sell them for 52 cents each. She got cash out of that deal. She used that credit to purchase new shares in Common Air. We can see that she originally had 67 shares in Common Air. She's going to buy an additional 54 and debit that amount from her account. Total transaction for the month, we actually have a debit of $66.40, leaving her a cash balance of $6.96. She now has 121 shares of Common Air, so her dividend is going to be increased, and her Eagle dividend was cut, so it wasn't paying out anyways. Bob, on the other hand, wasn't planning on looking at his portfolio at all. He was expecting to make his 7% return or greater, and he was just going to let it coast. So that's exactly what he did. When we get to March, we can see that most of the dividends are actually the same. $25.05 for Bob and Alice. Now when it comes to Common Air, all of a sudden Alice is receiving more money. She is getting $14.82 because she has 121 shares. Bob is only receiving $8.21 because his account only has 67 shares. So at the end of the month, Alice collected $91.12 in dividends in March. Bob collected only $84.51. He actually has a little bit more cash in his account because Alice used some of her for this purchase, but the dividends collected, Alice is collecting greater dividends. Now, no news happens month after month. These dividends just start to roll through. So in April, Alice continues to receive slightly more money. She's making about $6 a month more than Bob is, and the cash balances just keep going up. So by October, Alice, making her little bit more per month, is actually almost caught up to Bob. Her cash balance is $610, and Bob's cash balance is $618. There's also some other news in this portfolio, completely unexpected, but one REIT was having a share buyout. Those people paying attention, like Alice, found out early that her one REIT shares were going to be converted to cash for $4.27.5 each. This is a pretty hefty profit. She bought these in February for $3.64. So did Bob, $3.64. And they're both going to get this buyout. They're going to sell the one REIT shares for $4.27. Both of their accounts get credited $1,152. Alice has been paying attention to the news and she knows exactly what is going on. She's been looking at her account and she sees down here that TNT is trading at a really good valuation. She bought it for $6.05 in February and she decides that it's trading at $6.36 and she's going to buy some more shares. She already has 164 shares. She buys an additional 277 shares and this debits her account. So now the dividend is increased. We can see that before TNT, Alice was collecting $8.12, so was Bob. Now, in November, when she gets her dividend, she's got way more shares, so the calculation is higher. Bob still receives his $8.12, and Alice receives $21.83. So this increases her monthly dividend yield to $73.83. Bob has a whole bunch of money sitting in cash because he hasn't rebought anything after this sale went through. So he is sitting on $1,800 in cash and he's collecting his $51 a month in dividends, actually less than he was collecting before in most months. Now they don't do anything in December and January. So both of them collect some money. Alice gets $98, Bob gets $76. Now I know you guys all want to know exactly what the shares did because you think that these high dividend paying stocks aren't sustainable yields. So let's take a look. Apollo was trading at $5.92 and dropped a little bit, but it paid out more dividends than it lost. The $988 investment paid out $100 in dividends and is now worth $900, so $1,000. We've actually made $10 on that drop. BK was trading at $12.73, now trading at $13.20. So we've had this gain plus the dividends that have paid out. Brookfield, again, 1601, 1693. So we had exactly 5 of them showing a loss on the share price and 5 of them having a gain on the share price. And that's the same for Bob and for Alice because obviously they're the same stocks that they held in the portfolio. Overall, at the end, Alice, who made a total of 13 transactions over the year, her initial 10 transactions, and then 2 in February, and then 1 in October, she paid $130 in fees, or 1.3% of $10,000. She had an account value of $10,589 in shares, and she had $247 in cash. So her total return on investment, $10,836, or 8.4%. Bob, on the other hand, he's got $8,595 in stock value. This $1,900 he has sitting in cash is almost 20% of his overall portfolio sitting in cash. That is not a good thing for an investment portfolio. That being said, he still made a 5.4% return on investment after doing absolutely nothing but buying 10 stocks that he can just own forever. Now, 8 of those 10 are still currently paying a dividend. You can see how important it is to pay attention to your portfolio if you're going to be a self-directed investor. If you're not, things like this can happen. You can let it slip and it's going to get a 5.4% return. Still better than you're going to get at most banks, but not as good as it could be. Alice, way better decisions, just 3 little transactions over the course of the year resulted in a lot more money for her. As always, thank you so much for watching. If you're not already a subscriber, remember to click the subscribe button down below and turn on your notifications. If you are a subscriber, please hit the like button, leave a comment, even if it's just to say hello or say thank you. Everything helps my channel grow. Let's get rich together.